All right, let's kick off another deep dive. Today we're going to focus on Havells India Limited.
Havells.
Yeah, you know them, right? I mean, they're pretty much everywhere if you need something electrical in India. But there's a lot more to their story than meets the eye. We're going deep into their Q3 FY25 performance, using their reports and also sneaking in some insights from their earnings call. Should be interesting.
It really is a fascinating case study. I mean, Havells is so embedded in the Indian economy. You can really see how things are shifting based on how they're doing. Consumer demand, infrastructure projects, even global stuff like commodity prices, it all shows up in their numbers.
So think about Havells as like, if you need it and it's electrical, they probably make it or sell it, right? In India, at
Yes,
least.
such, yeah.
We're not just looking at the raw numbers, though. We want to figure out what this all means for Havells going forward.
Exactly. The big headline this quarter is that 11% year-on-year revenue growth.
Whoa, 11%.
Yeah, they hit a total of Rs 4,883 crores. That's pretty strong, especially in the current environment.
That's a big jump. So what about their earnings?
EBITDA is at Rs 432 crores.
EBITDA. Always got to love those acronyms.
Right. And net profit came in at Rs 283 crores. Plus, they got a nice cushion of cash and cash equivalents, Rs 2,710 crores.
Healthy cushion. All right, enough the big picture stuff, though. Let's break this down. What's happening in their different segments? What about switchgears? That seems like their bread and butter, right?
It is, and they saw a really solid 10.8% growth there, mostly driven by real estate and all the infrastructure projects going on in India.
Makes sense. Construction booming. Got to have the electrical gear to go with it.
Exactly. But there's a little wrinkle. Margins in that segment actually dipped a bit.
Oh, how come?
Well, they moved a plant, consolidated things a bit. It was in Faridabad, now it's in Sahibabad, combined with their industrial switchgear facility.
Moving a whole plant, that's got to be costly, right?
In the short term, yeah.
Yeah.
They basically said it caused some inefficiencies, impacted the margins.
Yeah.
It could be part of a larger plan. Centralize things, get more cost-effective in the long run.
Interesting. Short-term pain for long-term gain, maybe. Okay, so what about cables? What's the story there?
Cables were doing great. Power cables specifically, huge demand. Plus, their new plant in Tumkur is coming online and contributing to that growth.
Awesome. New capacity always helps.
Yeah, but there's a twist. Remember how copper prices went down a bit?
Oh, yeah, I vaguely remember that. What happened?
It led to this thing called channel destocking.
Channel destocking, okay.
Basically, when a key component like copper gets cheaper, everyone holding inventory kind of freaks out. Distributors, retailers, they don't want to buy more because what they already have is worth less.
Ah, so it's not that people stop needing cables, it's more like a pause in buying.
Exactly. Havells thinks this will turn around in Q4, though. Restocking should happen, plus copper prices are expected to go back up.
Okay, that makes sense. Speaking of prices, what about their lighting and fixture segment? Anything illuminating happening over there?
Good one. They actually had good volume growth, but revenue took a hit.
Oh, why's that?
Prices. LEDs are getting cheaper. It's a super competitive market.
So they're selling more but making less per unit. Ouch.
Yeah, it's tough. And get this, even their premium stuff, the COB technology, it's facing price compression.
Wow, you'd think premium would be a bit more insulated from that.
You'd think so.
Yeah.
But it's just how it is right now. Havells needs to get even more creative, differentiate themselves.
Okay, let's move on to something a little sexier. What about consumer durables? This is where brand loyalty matters, right? How's Havells doing in that arena?
They call it the Electrical Consumer Durables segment, ECD for short. They're on a roll, 14.9% year-on-year growth.
Really? That's impressive. What's driving that?
Everything, fans, appliances, water heaters, even personal grooming stuff. It seems like everything is doing well.
So they're clearly hitting the right notes with consumers, but their report mentioned something about product mix impacting margins, something to do with small appliances. What's that about?
Yeah, small appliances, things like mixers, toasters, that kind of stuff, they don't have the same profit margins as the bigger appliances.
So they're selling a ton of these smaller things, but not making as much money per unit. Is that a problem for them?
It's something to keep an eye on for sure. But here's the thing. They're making a huge push into larger appliances. They've allocated a massive Rs 480 crores for a new refrigerator facility.
Wow, that's a statement, isn't it? They're serious about refrigerators.
They are. It's all part of their plan to become a full-fledged consumer durables player, offer a wider range of products, attract a bigger customer base.
Speaking of full-fledged, we can't forget about Lloyd, right? That's their dedicated brand for consumer durables. How'd they do this quarter?
Lloyd had a steady quarter. Actually, they hit break even for the year to date.
Break even. That's good, right?
Yeah, it's a good milestone. Margins are improving too. They've been doing some smart cost cutting.
All right, break even is nice, but what's the bigger picture for Lloyd? How are they trying to stand out in that crowded market?
Well, they've been repositioning the brand, focusing on differentiation, unique value propositions. They're also expanding, moving into refrigerators and washing machines, trying to align with Havells' overall ambitions in that consumer durables space.
So Lloyd is finding its footing. That's definitely something to watch closely. Now, there's this one last segment, and I gotta say, the name is intriguing. It's called the Other segment. What even is that?
It's kind of a catch-all for their newer stuff, emerging product categories, that kind of thing.
Oh, so the experimental stuff.
Kinda. But here's the interesting part. They actually reported a loss in this segment in Q3.
A loss? That's surprising given how well everything else seems to be doing. What happened?
It seems like it's mostly due to investments. These new categories are still in the early stages, so they're pouring money into them.
So classic short-term pain, long-term gain situation?
Yeah, exactly. And to be fair, the segment is still profitable year to date. Just this quarter had that dip.
Makes sense. They're placing their bets, even if it costs them a little bit in the short term. Now, one thing I noticed both in the reports and on the earnings call was the increase in employee costs. Quite a jump. What's driving that?
That's all about their expansion in consumer-facing businesses. They're hiring new talent, building out their sales and distribution networks, developing new products. It all adds up.
So they're not just talking about growth, they're backing it up with real investment.
Yep. And it seems like it's paying off. They're outperforming the market and gaining market share in several key categories.
Now, that's what I call putting your money where your mouth is. But hey, we got to hold on to those market share details for now. That's a story for part 2 of our deep dive. Stay tuned. We're back and ready to dive into those juicy market share numbers we teased earlier. Investments are great, but are they actually translating into wins for Havells?
The numbers tell a pretty compelling story. Water heaters, for one, and small domestic appliances. They're really making headway there.
So they're focusing on specific areas where they see an opening. Smart move.
Exactly. Not trying to be everything to everyone. And it looks like it's working. They're expanding their reach, building those brands. The results are definitely positive.
Makes you think of that old saying, what is it? Build a better mousetrap.
And the world will beat a path to your door.
Something like that. But these days, it's not enough to just have a great product. You got to get it in front of the right people.
100%.
Yeah.
And that means going beyond those traditional stores. Remember the management talking about those new channels? Quick commerce, modern retail, all that.
Yeah, they definitely emphasize that. It's like they know things are changing. Consumer habits, how people shop, they're adapting.
And tapping into where consumers are actually buying stuff these days. Online marketplaces, apps, all of it.
Makes you wonder what's next. Drone delivery for appliances.
Maybe. Who knows? But seriously, channel expansion is crucial in a market like India.
Okay, let's zoom out a bit. Havells is doing this, that. But what about the overall picture in India? The demand trends, the economy, that's going to play a role, right?
You're absolutely right. Can't ignore the bigger context. And it's been a mixed bag lately. Some early signs of improvement in consumer spending, but then a dip around Diwali.
Diwali, for those who don't know, is a huge deal in India. Festival of lights, lots of celebration, and of course, tons of shopping.
Yeah, so a dip in spending during Diwali, that's a pretty big signal. Points to some underlying weakness in consumer sentiment.
So things aren't as rosy as they might seem.
Well, they did see some recovery after that, towards the end of the quarter. So it's a bit of a roller coaster.
Okay, up and down. How's Havells handling this uncertainty? Are they freaking out?
Nah, they seem pretty calm, acknowledging the challenges, but still optimistic about growth. Their strategy is three-pronged. Channel expansion, we talked about that. Product innovation, got to stay ahead of the game. And keep pushing for market share gains in those key areas.
So control what you can control. Focus on their strengths, even with all the external stuff going on.
Exactly. And there's another interesting angle. While consumer demand is a bit shaky, they're also counting on industrial growth, infrastructure, all that.
That makes sense. A growing economy needs more of everything. Factories, buildings, roads, and all that needs electrical equipment.
Exactly. So even if consumer spending slows, that industrial demand can help balance things out. They're playing both sides, which makes them more resilient. Now, before we wrap up this part, there's one more thing from the earnings call that really stuck with me.
Okay, I'm all ears. What is it?
They kept talking about brand building, especially for Lloyd. in that consumer durable space. It's not just about making stuff, it's about creating a brand identity, something that connects with people.
Yeah, that whole idea that people buy into a brand, not just a product. The lifestyle, the image, all that.
Precisely. And that's what they're going for, especially with Lloyd. Building a brand that stands for something, something consumers trust, connect with.
Okay, so we've got a company that's financially sound, strategic, adaptable, and focused on building strong brands. That's a pretty good picture, right?
It is. But is it the whole story? What about the risks, the challenges? That's what we'll explore in the final part of our deep dive. Stay tuned.
We've been through a lot with Havells, haven't we? Financials, all their different businesses, even pondered the future appliance delivery. But before we call it a wrap, let's take a step back, big picture time.
Yeah, like putting a puzzle together. We've seen all the pieces, now let's see what the full image looks like.
Exactly. So if we had to boil it all down, what are the key takeaways? What's the essence of the Havells story right now?
Well, first things first, Havells is in a serious growth phase.
Yeah, that 11% revenue growth is hard to ignore, especially given how things are for a lot of companies right now.
It's not just growth for the sake of it, though.
Yeah.
They're making strategic investments to really build a strong, sustainable business.
Those investments in consumer durables, that new refrigerator facility for Lloyd, those were big moves.
They're not messing around. They want to be a major player in that market, and they're willing to play the long game, even if it means profits take a hit in the short term, especially with those newer categories they're trying out.
Which brings us to another big takeaway. Havells is really adaptable.
Right. They're not stuck in the past. Embracing new tech, how consumers are changing, those new ways of selling like quick commerce.
It's like they're dancing with the market, adjusting their steps as it changes.
Exactly. And it's not just about tech and strategy. They're investing in their people too.
Yeah, those rising employee costs we talked about, those are really investments in their team, the people who'll drive their future success.
It's a smart approach.
Yeah.
They get it. Sustainable growth needs everything. Strong financials, clear vision, adapting to new tech, and having a great team.
But we got to be realistic. There are challenges. Consumer demand in India, it's all over the place. And the competition in consumer durables, it's intense. Lots of big players already there.
True, it's not a walk in the park. There are definitely risks. Which brings us back to that question we posed earlier. What's going to be Havells' biggest growth driver moving forward?
After looking at everything, I think it comes down to one thing. Can they crack the code of the Indian consumer durables market?
Interesting. Why that specifically?
It's a huge market, tons of potential, but it's also really complex. Consumers are picky, brand loyalty is a big deal. If Havells, specifically through Lloyd, can create a brand that really resonates with Indian consumers, the sky's the limit.
I see what you're saying. It's not just about making good products. It's about building a brand that stands for something. Aspiration, quality, maybe even a little national pride.
Exactly. If they can tap into those emotions, they could really dominate that market, and that would change everything for their growth.
Well, there you have it. Our deep dive into Havells India Limited comes to an end. We've given you the insights, the analysis, maybe even sparked a few thoughts. Now it's your turn.
Go out there, stay informed, and keep exploring. If you want to learn more about Havells, check out their website. They've got all their reports, presentations, even product catalogs.
And until next time, keep those questions coming. Keep learning and keep diving deep into the world of business and finance.
And hey, who knows? Maybe we'll revisit Havells down the road and see if they've conquered that consumer durables market. Until then, stay curious.